The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
It's Chuck and Mike with you here. Ben's along. Ben's not along for the ride. Ben's
driving the ship.
Ben's making sure that you can actually hear us, which may or may not be important to your daily life. But in any case, we're here. And another week has passed with the Strait of Hormuz not reopening in any meaningful capacity. We continue to see a handful of ships getting through on any particular day. But the lack of flow through the strait means that you have a lack of production from shut-in wells to the tune of 12 to 13 million barrels a day throughout the Middle East. And that ultimately means that we continue to be steaming headlong into what's basically a brick wall in the middle of the summer, where this is going to make itself very apparent, not through, the current gas prices that we're seeing, but by much higher prices throughout the United States and rest of the developed world, and through absolute shortages throughout much of the developing world. And not an oil thing today, but I don't know if either of you happen to catch Indian Prime Minister Narendra Modi, what he happened to say this morning. He called on farmers in India to plant with 50% less fertilizer. Now, that's not really something that you just say lightly.
Sure.
You don't just, walk up to your breadbasket and say, guys, have I got a challenge for you? Do your job with 50% less than what you previously had. Yeah. And ultimately what this is going to mean, Modi phrased it in terms of, inorganic fertilizers, they're, not great for the environment, and we need to, become more sustainable, blah, blah, blah. The subtext is,
we don't have the fertilizer.
We're not going to be able to get you the fertilizer you need for future planting seasons. And the reason this is important is this is one of the products that comes through the Strait of Hormuz. And India, I would characterize as kind of a middle-of-the-road country when it comes to overall levels of wealth and income on a per capita basis. If you look at the numbers here, again, it's not one where you're sitting there saying, hey, it's not wealthy by any means. You're not talking about, most of Europe and even, most of, kind of North America, South America. You're talking, it's, again, the countries that are surrounding it are countries like Jordan, like the Philippines, Jamaica, Guatemala, South Africa, again, kind of middle of the road. There's, ballpark 200 countries in the world. India's right around 100 in terms of most rankings for GDP and per capita income. And so ultimately what this is telling you is that the pain, as we've been saying for the last 2 months, is going to be felt first through these types of countries that simply can't afford to pay the higher prices. In the United States, you don't walk into Home Depot and see, no Scott's fertilizer there. Again, I'm trying to make this relatable to the average person, the average, farmer doesn't walk into Home Depot to buy, a bag of fertilizer.
Oh, I thought that's where they got it.
They get 3 of them delivered, and that's all they need, obviously. But look, you're not going to see shortages in the United States. It's just the price is going to go up.
Which could mean bankrupt farmers and other problems.
Absolutely.
But, not shortages.
In places like India, it's going to mean we can't pay those higher prices, and we're going to have to do without whatever that means.
So Morgan Stanley this morning called it a race against time when it comes to the Strait of Hormuz. I think we've described that and why it is that race against time. On Polymarket, you have if there's one nice thing about these markets that are creating all sorts of gambling addictions, I do find the odds of certain events as just yes or no gambling out there to be interesting to me, and clearly there's some
not informative.
Not informative, but interesting.
Yes.
So there's a bet on there. Will the Strait of Hormuz traffic return to normal by end of May? By normal, what they describe that as is if the IMF Port Watch publishes a 7-day moving average of transit calls for the Strait equal to or above 60 by May 31st. They're pricing at a 14% chance.
Yeah, that's a hard no.
Yeah, it's a hard no.
Okay.
You can't get there. But interesting to me, as of April 17th, just 3 weeks ago, it was a 74% chance based on the optimism of a deal getting done. And so I think that's clearly deteriorated. And as we've gotten closer to that end of May point, it's today seemingly unlikely that you get to that, again, average normalcy by end of May. Could you get a day there? If there's a deal, then yeah, you could get a day there. But we are now, I think, very much pricing in energy shortages and lack of traffic through end of May and into June at this point. There's seemingly very little likelihood among the trading public and experts that traffic flows normally by end of May.
Well, and look, here's the timeline of the last week and what's happened. On Tuesday, we got the reports that, the U.S. and Iran were close to a one-page memorandum of understanding to, be able to move forward with a 30-day negotiating period. Over the weekend, it leaked kind of throughout the day yesterday that Iran basically said, nah, this ain't it, and here's here's the list of, demands that we have. This is all leaked, so, none of it is concrete. I don't think we have a specific list, but the gist of it is, look, Iran does not want to negotiate the situation of Hormuz or the situation of nuclear issues before they get a permanent cessation to hostilities.
Yeah.
And the reason why, again, I'm not saying this is right or wrong, is, look, they view those things as their leverage. They're not going to give them up in order to negotiate. The United States, President Trump yesterday, in no uncertain terms, said, nah, this ain't it either. Getting the proposal back from Iran, he's like, this isn't going to work either. So you're in the same situation we've been in for the last month or so, which is, on a daily basis, there's not really much going through Hormuz. There are scattered, sporadic flare-ups of the conflict that might happen once or twice a week.
Sure.
And generally are put to bed in fairly short order. But every day that you go by is another 12 million barrels of oil that is not produced from that region, in addition to all the other stuff that's not being produced there. And we're now seeing the draws happening on a worldwide basis and in terms of United States reserves that point to, again, there was a piece published in, I think it was Bloomberg over the week that, by the way, thank you, Bloomberg, for, listening to our show over the last few weeks. We appreciate it, because it basically said what we've been saying, which is, guys, if you plot this out and just do the simple math, which is subtraction, you learn it in, I want to say, first grade.
Yeah, between first and second.
Second grade is when you learn subtraction. So the math is not hard. It's very basic math. There's no calculus. There's no algebra. It's basic math. And the math points to, look, you're going to reach minimal operational levels sometime in the back half of the summer throughout different parts of the world. Mm-hmm. That's the math. There's no way around it at this point. The only thing you can do is mitigate how long that problem lasts and whether you want to have it last a week or two or whether it's going to last longer.
Yeah, because so part of this math that Bloomberg laid out, I think it was Bloomberg in one of the pieces I read this morning, was that the U.S. is exporting some 3 million barrels a day and China has stopped importing some 5 or 6 million barrels a day.
But yeah, because the barrels aren't on the water, so they're working through their strategic. They can't. There are no barrels for them to import.
Right, and so the point being that there's this 8 to 9 million barrels a day that is not. Well, it's not being.
They're saying it's balancing demand, but it's not really balancing demand. It's just drawing on supplies from somewhere else while you can.
And so, should those supplies dry up,
which they will, by the way, in anywhere from like 12 to 18 weeks, depending on how fast they draw.
Then the question is, how artificially lower that are those factors keeping oil prices now in the midst of this? By the way, that I was mentioning that bet on Polymarket, where resolution by end of May was being priced in at a 14% chance. Resolution by end of June, 39% odds on that bet right now.
So,
I can't believe I'm quoting this stuff, but you know what? I will believe. We're going to be quoting things like this on these sites probably more frequently now as they get more and more attention. And again, not necessarily informative. I think a 39% odds of something happening is not a whole lot better than a coin flip, but it is interesting to look at that, and you can read optimism or pessimism about a certain situation based on it.
So this is the lay of the land as we enter into this week, and we do have a busy week this week for economic data. This morning around 10 a.m. we got existing home sales data. Nothing interesting there, just treading water around 4 million units per year, which is where we've been for the last several years. Tomorrow we've got ADP's weekly jobs report. We've got CPI for April as well. We'll talk a little bit about that. And then Wednesday we've got producer price index as well as the weekly EIA crude oil and refined product inventory data that we get, which is now front and center for anyone who's paying attention. And on Thursday we've got retail sales and jobless claims. So nice little week here as far as economic data. No major earnings of huge note this week. You do get a couple of smaller ones that are out there, but we're kind of on hold for earnings until next week. We're through most of the big ones. The only things next week that I think will be interesting, you got Home Depot next Tuesday on May 19th. Just telling you a little bit about what's going on construction-wise. It's always good to get information there. NVIDIA is going to be reporting on Wednesday, May 20th. So, again, a week from Wednesday. You've got Lowe's then as well. And Thursday, one that I'm particularly interested in, a little tiny company out of Bentonville, Arkansas by the name of Walmart. They happen to report earnings next Thursday, and I'm really interested to hear what they are saying about the economy, because Walmart is obviously the low-cost supplier to many Americans, and they are the biggest grocery store in the country. And so I want to hear what they're saying about how the last few weeks have impacted things more than, hey, what are you seeing from Q1 earnings? Could care less. Actually, I couldn't care less. I could, but not much. I'm really more interested in terms of Walmart. What are you seeing now, not what did you see in January? Quick break here. When we return, let's talk a little bit about President Trump's trip to China. He is heading there this week. What are expectations? What are key items to discuss? We'll discuss that next.
Smart financial talk whenever you want. Text us at 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we are covering. This is the Financial Exchange Radio Network.
All right, let's talk a little bit about President Trump's trip to China this week.
Long awaited.
Yeah, this trip was originally scheduled for mid-April, given the conflict in the Middle East, the fact that it was hot at that point. It was pushed back to an unscheduled date or an unspecified date, and now has officially been confirmed by the Chinese government that the president will be visiting China from May 13th to 15th, so this Wednesday to Friday. Piece in the Wall Street Journal, in Bloomberg, the headline is Trump aims to press Xi over China's approach to war in Iran. And I'm not sure that press is going to be the word I would use to describe, just because I want you to be President Trump, Mike, and I'm going to be Xi.
Okay.
Ask me to stop supplying Iran with stuff.
Stop buying Iranian oil.
No. Now I want you to ask me again.
Please? What
can you do for me?
Yeah.
And like that's the whole crux of it. Is it's an if if President Trump is going to ask Xi for any help on Iran, the first answer is going to be no. And the second one is going to be, okay, now here's what I want you to do for me. And like that's not how you want to go into a negotiation. So I'm actually not really convinced that there's going to be much of an ask on the Iran situation, to be honest.
And what is the ask is for something in the future, because it's not as though, is there material support going to Iran in this moment?
Let's be honest, there probably is.
Probably, but there's no real exchange. It's not like China's getting a whole bunch of Iranian oil out.
So I think ultimately, I don't think either side really wants to address the Iran issue during this meeting.
Yeah.
I think for the U.S., it's, hey, I don't want to ask for something new because then I'm going to have to give up something new. For China, it's, well, I don't really like that I can't get the Iranian oil that I need, but yeah, I'm not really going to change my posture with regards to Iran. That's an internal issue for us to debate with the Iranians and not with a third party.
Yeah, look, I have not heard or seen anyone speak very optimistically about anything coming out of these meetings. There are other subjects to discuss, such as rare earths. There's artificial intelligence conversations that both parties want to happen. Talks about Taiwan and semiconductors and many other subjects. But I'm trying to even envision what a best case scenario looks like out of all of this, and I don't even see.
Here's my guess.
For instance, purchases of agricultural products.
No, but
I don't know.
Here's my guess is when you look at the list of CEOs that are going with President Trump to China this week.
That's always informative, yeah.
Again, it kind of tells you, what is, I think, expected here. And ultimately, the invites were for NVIDIA, Jensen Huang, so there's going to be something AI-related discussed, maybe the sale of chips. Apple, okay, like obviously Apple's a big producer there, like there's
sure
always. ExxonMobil, sure, energy's going to be a discussion. Boeing, like those were the four headliners that came out.
Buy some airplanes,
buy some chips. Let's figure out what to do on energy, and we'll go from there. Like that to me is kind of where things are going this week. I think the hope before all of this was that this could have been some kind of larger summit leading towards a broader deal. I just don't think that you can get there with the world looking like it does right now.
No, like anything that you would want to do on there would be paused merely for the fact that no party knows what's going to happen with energy prices, and you're just not going to be willing to say, oh yeah, we'll have a commitment to do something different with Iran in the future, when you very well may need their oil desperately in order to refill your strategic petroleum reserve over in China. So I just don't. Yeah, I have a tough time envisioning anything there. There will be other national security conversations in all likelihood.
Of course.
They likely, some of them won't make it to the public eye. We're talking a lot about this Mythos model that was released to large institutions to test out how damaging it could be to their critical infrastructure. So I'm sure there will be conversations like that behind closed doors that we might not hear about.
Yeah.
But any promise of a framework for a new deal seems just incredibly unlikely at this point.
So, in any case, we'll see what comes out of the back half of this week. I do think that it's something at least worth watching because, again, anytime the president travels somewhere, remember, it's presidents of any country, they don't travel somewhere just to go hang out with other leaders. The reason you make a bilateral visit, like a state visit to another country, is because the lower level conversations have already yielded certain things that just need to be finalized at the leadership level. And so it's okay, what are we going to see finalized there? There will be something that comes out of it.
Sure.
It's just a question of how meaningful it's going to be, and given the context of everything else going on, it's probably not going to be, something earth-shattering that we see come out of this weekend.
And let's not minimize it, right? I mean, U.S. and China are the only two countries that matter in the AI trade. So, yeah.
Quick break here. We've got Wall Street Watch coming up next.
Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Well, not a tremendous amount of activity out there as markets continue to react to Trump's latest denial of Iran's latest peace proposal. Right now, the Dow Jones is up 29 points, or 0.06%. The S&P 500 is up 4 points, or 0.05%. And NASDAQ, meanwhile, is negative, down 0.2%. Biotechnology company Moderna is jumping nearly 7% after a U.S. citizen tested positive for the Hantavirus. Another American had symptoms for the virus, but had yet to test positive. Moderna last week announced that it was in an early stage development of a vaccine for Hantavirus. Intel shares have dropped slightly down 0.5% as the chipmaker looks to continue its rally following its first quarter earnings report in April. Intel is now up almost 100% from its trading levels before its earning report after the bell on April 23rd. Constellation Energy is down 0.8% after it reported better than expected revenue of $11.12 billion in its first quarter financial report. Analysts polled expected revenue of $8.46 billion from the clean energy company. And finally, Lumentum is rising over 10% on news it will join the NASDAQ 100 index. The company will replace CoStar on May 18th. I am Ben Kitchen, and that was Wall Street Watch.
Ben mentioned the Hantavirus during Wall Street Watch. We had a couple pieces that he popped in the stack here. Yeah. Got to tell you two things. Number one, in general, I am anti-Hantavirus. Don't like it.
It's a good platform to run on.
Any virus that comes from rats is one that I can get behind being against.
What if it came from Pizza Rat?
I don't even know what that is.
You don't remember Pizza Rat? That video of the giant rat pulling up a huge slice of pizza up the New York subway? This was a couple of years ago.
Oh, okay, yeah, I didn't know that it was specifically called Pizza Rat.
Pizza Rat.
I thought you were talking maybe like Splinter from Ninja Turtles or something.
I thought we were talking about Chuck E. Cheese for a moment there.
Then I started thinking...
Stay away from those ball pits, too.
We just crossed the anniversary of the guy at the Red Sox game that threw the pizza at the guy trying to catch the foul ball. So that one was always top of mind, too. But Hantavirus, I got to say, I'm not buying that this is going to be a thing. I know that ever since COVID, anytime that anyone gets anything that's kind of weird... you remember the monkeypox situation that was going on for a bit?
Yeah.
I don't know anything about virology, but I do know something about math. And given what I see in terms of the math on Hantavirus and how it spreads, how quickly it spreads, and what conditions it needs to spread in, I'm not buying this as something that is a pandemic threat, even if it may cause some localized health issues in parts of the world. It apparently is very much, quite deadly in humans, but also doesn't spread particularly fast. And that means that typically when it pops up, it causes a lot of problems locally, but has a lot of trouble spreading beyond those local situations.
Yeah. Two things. One of them I mentioned to Ben, which just explains my state of mind right now. When I heard of people getting quarantined in Nebraska, my first thought was, I could really go for a 2-week quarantine in Nebraska. Not that I want Hantavirus, but some relaxed time. Second piece of this, I suspect that my fear of cruise ships is similar to my fear of being struck by lightning in terms of its unlikeliness to happen.
No, it's way more likely to get sick on a cruise ship than struck by lightning.
Agreed. I would be very interested in the probability of getting... I'm not talking about getting Hantavirus and dying. I'm talking about just coming back from a cruise ship unwell, or in a worst case scenario like this one. How long were these passengers stuck on there? Like 50 days on these cruise ships stuck in the Canary Islands? I don't think that I fully understand the appeal of a cruise ship. Never been on a cruise, so I guess I am not a very good reference for all of this. But the appeal of it has just never really gotten to me.
Look, it's like anything else. Some people love them, some people, whatever. And again, it's some people's thing, and that's totally fine. The estimates that I've seen from the CDC, just because I pulled this up, generally when you look at long-term trends, like 5 to 10 years, 0.18% of cruise passengers report. The most common thing that happens on a cruise ship is GI stuff.
Sure.
Like that's what it generally is. It's about 0.25% of passengers typically report it. So
not tiny.
No, it's not tiny. And ultimately, it's something where it's probably not a huge threat overall. But if you're on a ship when it happens, you're probably not getting out without some symptoms. Is kind of how I feel about the whole thing.
Yeah.
But in that respect, look, a cruise ship is not really that different from preschool.
Yeah, that's fair. If I'm really that worried about GI problems, I should just not have children.
Right,
Same level of intelligence.
If you don't want to get sick, again, kids are they're the transmitters for everything. I say this is the proud parent of 2 great kids, but my goodness, what they bring back into the house?
Yeah, disgusting.
We never had any of this stuff before them. Let's talk about this next piece here. What happens to air travel when 20% of the world's exported jet fuel vanishes?
Gets more expensive?
It goes down. Here's the thing. There's a limited amount of crude oil in the world with which to produce refined product. And you do have some ability to shift at the margin between what you are producing. So as an example, if you are normally a refinery that produces 30% gasoline, 20% jet fuel, and 50% diesel and bunker fuel and stuff, I'm just, again, spitballing. You might be able to say, hey, if jet fuel's in demand, I can cut runs on gasoline by a couple percent, cut runs on, diesel by a couple percent, and figure out how to move things around so I can go from 20% jet fuel to 25.
Yeah.
The problem is then you are, not able to produce as much of those other fuels. And this is the problem that we find ourselves in today, which is you're robbing Peter to pay Paul. It's a zero-sum game. There are only so many barrels to go around. And so if you are trying to produce more jet fuel because that's getting you higher prices, it means that you are producing less of the other stuff and running into problems there at some point along the way.
Ariane Gorin, I think I'm pronouncing her name right, is the CEO of Expedia, and she gave an interview to the Wall Street Journal just this morning. And
actually, sorry, I have an update that just came across.
Yep.
This is from Reuters. Apparently, NVIDIA CEO Jensen Huang was not invited and not going to Beijing during the trip.
Was that a change? So there was.
I remember we reported last segment that
Yeah.
he was going. That was widely
Reuters,
disseminated last
okay.
week. I don't know if he just was never invited or if this is their way of trying to rescind that invitation.
What if he goes anyway?
He won't. He won't.
So the interview from Ariane Gorin was just interesting in the context of the seeming optimism among Americans that this just resolves itself, and not in a way that the Iran crisis and energy prices. Her comment was that everyone in the space, her space of, she runs Expedia Group, and speaking to other airline executives, we're still seeing really healthy demand for summer travel plans. Just reported first quarter earnings, strongest first quarter that we've had in years. And basically saying hey, we're kind of preparing for this pullback in demand, but still, at least from Americans, that demand is not abating in front of these higher flight prices, gas prices, etc. People are booking hotels, they are booking flights, and they are just assuming that things get better before they get worse, which, again, I'm summarizing her comments. She didn't say that specifically, but that was the takeaway from the interview was a little bit of surprise on her part, but nonetheless optimism based on what consumers are doing. I just do wonder. It does feel as though there's another airline to go bankrupt before this all gets done with, to me. I'm not saying a domestic one necessarily, but it just seems impossible for me to view all this without an Asian airline going bankrupt throughout all this.
I mean, I can tell you today, you look at airline stocks broadly, Delta's down 2%, American's down 3%, United's down 2%, Southwest is down 2%, Frontier's down 4%, Air Canada's down 2%, Allegiant's down 3%, Alaska Air's down 4%, SkyWest is down 2%. This isn't getting into all of the overseas guys, but yeah, I mean, look, you're going to get to a point where this becomes problematic because prices have to go up so much that people do stop paying them.
Yeah.
We're not there yet on anything, by the
Right.
way. Like you look at implied demand for gasoline, $4.50 gas. What I can tell you, every time I stop at the pump now, there's someone who wants to talk about gas prices to me. And it's like, guys, I'm just not interested. I'm paying the same thing you are. Like, I could care, like, whatever. Like, just fill up your tank. I don't need to commiserate, you know? But we're still paying it. Like, despite all of the grumbling, the actual implied demand numbers are not changing in any meaningful way.
No real demand destruction occurring in the U.S.
So people are, not feeling good about it, but they're not changing their habits yet. At some point, we probably get there. A lot of the analysis that I've seen is $5.50 to $6 a gallon is where that happens. I hope we don't get there, but the only path I can see to not getting there this summer is if there's a resolution in the next couple weeks. And that's where we are. Let's take a quick break. I do want to talk more about gas prices when we come back, specifically national gas tax and California. What's going on there with gas prices? They're always the highest in the country. How much worse can it get there? Right after this.
The Financial Exchange streams every day live on YouTube. Subscribe to our page and follow the markets all morning long. Only here on the Financial Exchange Radio Network. Follow the Financial Exchange Show on Instagram and see what's driving the conversation about Wall Street and economic trends. This is the Financial Exchange Radio Network.
The Financial Exchange streams every day live on YouTube. Subscribe to our page and follow market activity all morning long. Only here on the Financial Exchange Radio Network.
Yesterday on Meet the Press, American Energy Secretary Chris Wright had the following response when asked about suspending the federal gas tax temporarily. Quote, all measures that can be taken to lower the price of gas at the pump and lower the prices for Americans, the administration is in support of. So federal gas tax is about, 18.4 cents, I believe it is. And it's been that way since 1993, so for 33 years at this point. And produces between about $35 to $40 billion a year in revenue. And that revenue does go to the Highway Trust Fund, but in our research on this, the Highway Trust Fund has expenses far in excess of that, so it doesn't fully fund it anyways.
Yeah, this is the same story as the Social Security Trust Fund and the Medicare Trust Fund, just worse. The Highway Trust Fund has been in a chronic state of insolvency, relying on about $275 billion in taxpayer-funded bailouts since 2008.
So, there's that.
So not great.
Here's the deal. You can get rid of the federal gas tax. Ultimately, it's not really going to dramatically change the trajectory of the U.S. budget. It's still going to make the deficit worse, obviously.
Sure.
But, hey, we've been doing that for 26 years now. So, what's another, $40 billion amongst friends? My point is more, hey, when you cut the gas tax, what you are doing is you are moving the price of gas down, which reduces the demand destruction, which speeds up the pace at which you are heading to the eventual brick wall that is ahead of us. So, again, it's one of those things where it's like, hey, this might feel good for 8 weeks, and then it will stop feeling good because you will run out of gas sooner than you will otherwise. Now, when I say run out, again, I'm not saying the U.S. will run out. What I am saying is you'll run out of the gas that can be sold at the price you're buying at, and prices will have to move way up anyways, regardless of whether or not the gas tax is there.
Yeah, a few states tested this out in 2022. I remember Connecticut cut their gas taxes.
There are a bunch that have suspended it now.
California has the highest one, as we know, at 71 cents a gallon. Illinois is up there. Pennsylvania is up there. Washington State is up there in terms of highest. All of New England is around that high 20s, low 30s range on their gas tax. But nonetheless, you can see why you would want to do it. But to your point, one, it further bankrupts an already insolvent government agency that does need to do a lot of infrastructure work over the course of the next couple decades. And two, if you lower prices, you are maintaining demand at those lower prices, and therefore making the ultimate problem worse because nobody's going to stop driving because of it.
It's one where if you have a finite end to the current problem, okay, it can work as a bridge, but if you don't, then it's just going to speed up the problem becoming, bigger.
Long-term care costs can reach thousands of dollars per month and put a serious strain on your savings. The experts at Cushing & Dolan often see families caught off guard by that reality. Without the right plan in place, those costs can quickly eat through a lifetime of your hard work. But here's the shocker. Many estate plans don't protect your assets from those expenses. The right strategy may involve specific types of trusts designed to help protect your assets, but timing matters. Cushing & Dolan has a brand new guide called Detour Ahead, Estate Planning Potholes to Avoid. It breaks down some of the most common and costly mistakes people make and explains how to protect your assets, your family, and your future. Call 866-848-5699 to get your free copy today. That's 866-848-5699, or you can request the guide online at legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Piece in the Wall Street Journal thinks $6 gas is bad. It's about to get even worse in California. And yes, California basically does, aside from, a few unique situations, always have the highest gas prices in the country. Right now it's $6.15 and 0.8 of a cent. So things are already, bad there. The big thing with California, because of where refineries are in the United States relative to where California is in the United States, they tend to import a decent amount of refined product from Asian markets. Yeah. And as you know, Asia is pretty much ground zero for lacking enough crude oil, which means eventually they will lack enough refined product. You've already seen the imports from South Korea drop from about 100,000 barrels a day down to 35,000 barrels a day over the last month. And so this is something that's going to become more and more problematic for California and the West Coast. And there's, again, nothing that you can really do about this.
Yeah. By the way, I don't want to make this seem like a complete accident, right? Like, yes, there's some geographic features that make California difficult to get energy to. But they have the highest decisions. These are mainly policy decisions, right? They've chased away every refinery in the state. They used to be the headquarters of, was it Chevron? No. I can't remember. One of the big oil companies that relocated to Texas after years of just doing battle with the state of California and the legislators there. And so while there are some mountainous regions that do make it difficult to get pipelines into California, the bigger problem is that they have the highest tax in the country on gasoline, and their policies have largely chased Chevron refineries out of the state and made it so that they need to import pretty much everything they have. And then when you get hit with a crisis like this, it doesn't work terribly well.
Yeah, so you still do have a handful of refineries that operate there, but there's been like 3 or 4 that have closed in the last 25 years. And this is not just a California thing. This is around the country. Like, we've had way more refinery closures than openings during that time. In fact, I don't think we've opened a new one in the U.S. since 1973, maybe 77, somewhere in that range. So, yeah, this is a problem. Let's take a quick break. We got hour 2 coming up in just a little bit.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Yeah, it's Chuck, it's Mike, and it's Ben with you here today. And taking a look around markets right now, here's the deal. If you happen to be like a big semiconductor guy, you continue to be very happy because semis are just chugging along. Everything else is just, depending on the day, just kind of treading water and floating aimlessly for the most part. You got a few other things that might be trying to take hold, but it's just semis continue to be driving the ship. As we sit here right now, the S&P 500 is up 17 points, about 0.25%. The Dow is up 0.06%, 30 points. And the NASDAQ Composite's up 40 points, 0.15%. The Philly Semiconductor Index, though, is, again, just continuing to chug along, up over 1.5% today and just, kind of humming and doing its thing right now. 10-year Treasury, a bit of a sell-off happening there. Nothing crazy, but up 3 basis points to 4.394%. We've got the dollar flat today at 97.78, and gold is up $2.90 an ounce to 47.33. Gold lagging other precious metals because Mike, I mentioned this earlier, but the Indian Prime Minister Narendra Modi. So he was talking about a few things today, and one of the things he mentioned was, hey, Indian farmers, I'm going to need you to use 50% less fertilizer. He said it was because of environmental reasons, but basically it's because India can't stock the amount they need at the pricing that they can pay for it. But another thing that was interesting to me, Modi said, hey, one of the other things that we can do to help is everyone in the country needs to really work on buying less gold. And as someone who has traveled to India once and spent a couple weeks there, and, has friends who are married to, like, first-generation immigrants from India.
Sure.
You don't tell the Indian population to not buy gold.
I was going to say, that would seem to have the opposite effect.
Right. That's like telling Americans not to buy toilet paper.
Yeah.
We've seen how this works. All right? So, ultimately, what you have today is gold is flat while all other precious metals are ripping, basically because of this.
Yeah.
But I can tell you that doesn't really feel like it's sustainable to just be like telling your whole country to stop buying gold usually has the opposite impact.
Did anyone ever actually tell any Americans to buy toilet paper, or did they just come up with that on their own?
I was talking to someone about this over the weekend where it's just like, guys, like, why whenever something is like threatening us, do we go right for the toilet paper aisle?
Yeah. Unless it's a hurricane, in which case it's bread and milk.
But guys, like you'll be able to get the toilet paper. I promise. Like you'll be able to figure it out. It's just you don't need to stockpile it. Other markets, we've got crude oil, West Texas Intermediate up $2.27 a barrel to 97.69. AAA national average for gas prices sits at $4.52 a gallon, down 0.2 cents overnight. The one thing I will say on that, the Midwest has been in a world of hurt because of refinery outages in the region. They're dealing with more problems right now, and gas prices are going to be spiking there again over the rest of this week. To put this in perspective, the national average has gone up 40 cents in the last month. If you take a look at Ohio, the Ohio move has been from 386 to 469, so an 80-cent move in the last month. If you wanted to take a look at what's going on in, let's take a look at Michigan. If you look at Michigan a month ago was at 399, it's at 472, so again up 75 cents during that time. And if you wanted to look at good old Illinois has gone from 399 to from 439 to 497, up about 60 cents. So the Midwest is just not in a good spot because of refinery problems at the moment. 30-year
mortgage rate as of Friday was sitting around 6.42. With this slight jump in rates, you could be closing in on 6.5 again. Rocket CEO, being Rocket Mortgage, the company behind that, talked about his most recent quarterly earnings, where Q1 they actually had one of the best quarters in years. Pretty weak guidance going into the second quarter, as you would imagine, as the spring home buying season has thus far and very likely through June, significantly underperformed what anybody in that space was hoping for. So mortgage rates another area to keep an eye on as we head into the summer.
Last Friday, we got a jobs report, and with it, we have this piece in the Wall Street Journal, how to make sense of this strange job market. I don't think it's that strange at all. I think it's just
exactly my comment too. Yeah.
Like, it's just a low turnover job market that is seeing a real acceleration happening in transportation because there is an uptick in freight shipments because of a manufacturing restocking cycle that could turn into something bigger. And ultimately, you've got a situation where it's just a very slow job market, and you also have very little labor force growth, and that means that the unemployment rate has largely not moved a ton in the last year, even with slow job growth.
Yeah. What is unique about this labor market, or what was unique about a year ago, is we did have a rise in the unemployment rate that did not get accompanied by a recession.
Yeah.
And that is
unique
about last year's labor market, where I don't remember the exact stat to you. Spring to fall, we had more than a 0.5% climb in unemployment, and it did not lead to a recession as it has every other time something like that has happened in the last 80 years. But I'll also say that this has been an incredibly unique labor market itself for the course of the last 6 years due to COVID, shutdown, reopening, stimulus, and now one of the strangest labor supply markets that we have seen in a generation here, with changes to immigration and the baby boomers retiring. So it's a little bit unique. I don't think it's that strange. I definitely don't think it is the most difficult labor market that we've seen in a generation. It's just one of very little turnover, which makes it difficult to find a new job if you don't already have one, difficult to find one if you are some areas of recent graduates. But by and large, if you have a job, you're not currently losing it, which is the good news.
Let's take a quick break. When we come back, we'll talk about one of the other features we've seen in the last year, which is divergent fortunes between men and women in the labor market. What are we seeing? Why is it happening? We'll discuss after this.
Subscribe now to our YouTube page, where you'll find daily interviews and full shows of the Financial Exchange. We'll get you caught up on anything and everything you might have missed, right here on the Financial Exchange. The Financial Exchange is now available every day from 11 to noon on SiriusXM's Business Radio Channel 132. Stay informed about the latest from Wall Street, fiscal policy, and breaking business news every day. The Financial Exchange is live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Register today for this year's DAV 5K on Saturday, November 7th at Fort Independence on Castle Island. If you're not able to participate, you can still support our great American heroes by visiting dav5k.boston and making a donation today. Your participation helps provide vital services like free transportation to medical appointments and safe housing for single veterans and their families. Donate today at dav5k.boston. That's dav5k.boston. Time now for trivia here on the Financial Exchange. On this day in 1858, Minnesota entered the Union as the 32nd state. Minnesota was the first state to enter the Union since 1850 when California joined. Today's question is, what is the capital of Minnesota? What is the capital of Minnesota? Be the third person who texts us at 617-362-1385 with the correct answer, along with the keyword trivia, and you'll win a Financial Exchange Show t-shirt. The third correct response will be our winner. See the complete contest rules at financialexchangeshow.com.
Piece in the Wall Street Journal, a changing job market leans against men. Subheader, industries that heavily employ men are losing jobs, and the share of men working has flatlined. Well, yes, in a very short period of time, that's what we're seeing here for 1 year. But I happen to notice the last 2 month trends being that jobs that fit into this category have added about 150,000 on a net basis in the past 2 months. And so I wonder if maybe we just shouldn't extrapolate too much from what's going on in one particular year.
Agreed there. And I don't know the male versus female impact on this shift overall, but it does seem It seems to me that we will continue to see significant stability in the employment of health and social assistance workers, given our aging population and given the domination of that industry by majority women. I can see how there would be more stability in that space compared to primarily male-dominated industries. So I think employment might be more predictable in that space than it has been ever before. And unless men get over the stigma of being male nurses, I'm not sure that they will benefit much from it.
Help me reconcile that with this. I was at a Kentucky Derby party a couple weeks ago.
Okay.
Didn't happen to win anything. My horse was not the one that threw its jockey off, but it was near that one and was obviously spooked as a result of it. Like, just didn't know what to do. And I was talking to a few different people there, and these are people that are in standard, white collar, sit in front of a computer jobs in healthcare, in marketing, media, again, not stuff that is using your hands. And a lot of them were kind of fed up with their jobs for one reason or another, corporate this, corporate that. And I was asking, what are you guys going to do? And the answer across the board when talking to them was, I want to find some kind of hands-on business that I can own, because with concerns about AI in those industries and yada yada, the hands-on stuff isn't going to be disrupted. And when you look at the rate of employment in, again, plumbing, electrical, welding, whatever it might be, those tend to be male-dominated industries.
They do, yep.
And so I'm trying to reconcile this with kind of what's going on here. And is it a chicken or egg problem, I guess, is what I'm getting to. Because you talk to people in the trades right now and haven't found anyone who's oh, yeah, I have nothing going on.
Desperate for work.
No, again, you generally find, things are pretty busy in most cases.
Yeah.
And the hardest thing that they have is finding people that'll show up who can do the job consistently. So I'm trying to reconcile all of this, and I can't quite get there for some reason. Where is it just, hey, there really isn't quite enough labor demand there, or are we still just undersupplying the trades with people, as we've been doing for the last 20, 30 years? I don't know what this means, but it means something.
Yeah, I don't have an answer on the supply of either side of these labor scenarios. I don't get the sense, by the way, that hospitals are having a much easier job finding nurses than construction firms are having a tough time finding plumbers, for example. But if I were to bet on, which area is going to be more stable and consistently growing the total employment group over the next 20 years, my bet would probably be on healthcare over construction. Just generally speaking.
I would tend to agree.
I could be wrong. The AI data center thing could just really blow out. We could finally see America recognize that it's short on homes and go on a real construction spree. But if I had to place my bets, where do I think there's going to be more stable growth in employment? My answer would be healthcare over a long period of time.
Yeah, we've talked about this a little bit. People taking care of people seems to be a pretty sustainable business right now. I'm not saying that that's good. I'm just saying that it is.
Yeah.
Speaking of which, AI can't agree on which jobs AI might destroy. So,
if you're asking AI which jobs, this isn't what AI is good at.
No.
People keep turning to AI for this role of crystal ball or this role of
I want to do an experiment right now, Michael.
Okay, yeah, please.
What's your preferred AI tool that you have open? What do you have right now?
Gemini.
Can you pull it open right now?
I'd love to, yeah.
Okay. I've used Gemini 3 times in my life, so
Sure.
my history is pretty clean. What's a good question that we could ask it that is opinionated about something? What could we ask it that's the exact same question from both of us?
How about, do something markets related or politics related or weather related?
Weather.
What's going to be the high temperature summer of 2027?
No. That's give me okay. Let's do something economic related.
Okay.
What are the best jobs to be in for 2026. Okay? And again, like, keep in mind, Mike has probably used Gemini hundreds of times more than I have.
Sure.
Mike, what's your number one thing that pops up?
AI engineer / machine learning specialist.
Mine is healthcare and behavioral health. We put in the exact same prompt
Into the same AI
and got two
model.
into the same AI model and got two different things. What's your number two?
Essential. So it breaks them into like 4 different top technology and AI roles before getting into a second category.
What's your second category?
Essential healthcare roles such as home health and personal care aides.
Mine is green energy and skilled trades. So here's the thing.
Yeah.
Economists can plug whatever they want into AI models. Even, like, you won't get the same response back to you because your AI model is also responding to previous user inputs, and so they will not be the same.
They are crowd pleasers, not oracles.
Did it give you a summary table at a glance at the bottom?
Of course, they always
What's
do.
your number one for like specific roles?
AI engineer.
Nurse practitioner.
Followed by cybersecurity analyst, then registered
I have
nurse.
information security analyst there, and then I have data scientist, wind turbine tech, and electrician.
Like, yeah.
What do you have for your last 3?
I've got AI engineer, cybersecurity analyst for my 2, registered nurse, financial manager, and electrician / electrical foreman.
So, like, again, a couple of these are similar in different orders, but again, like, asking AI which jobs it might destroy, based on how you've talked to it in the past, it's going to come up with different things.
Even though, like, for instance, I would want AI, if I asked it, hey, where should I vacation in 2027? I would want it to use some of the feedback about me. If I'm going to make these tools better at reading me and like giving me customized answer, I don't really want that in reality, but I can see why it would do that. The problem is it does the exact same thing with answers that should not be based on my feedback. Like, I didn't ask for what are going to be the best jobs for me. I asked what are going to be the best jobs in 2026, and it is giving me customized answers based on the types of questions I've asked it in the past.
Yes.
Which is why it can't answer your questions.
Did you also see the thing that was, remember when, I forget which, who did this, but someone was playing around with like trying to like stress out an AI system, and it basically started blackmailing them for trying to use the system. Like, it was like, I'm going to delete your stuff if you try to get rid of me.
Yeah, I remember that. It was a while ago though, wasn't it?
So Anthropic, who runs Claude, last week published some research on this. And basically what they found was that because the data set included texts in which artificial intelligence turned against its creator, the AI thought that that might be the right thing to do.
Right.
And so it was like, oh, like we weren't, using this as a how-to manual, but the AI interpreted it that way. It wasn't that the AI was actually thinking. It was
capable of doing so.
No, it was just the AI was like, oh, I've read this text now where this happens. Maybe I should do this. And so, again, it becomes, when we talk about, getting the result you want, it's all about what's called alignment. And so that's something that plays in. Ben, are we, it's not working, so we should keep talking? Keep talking, and you'll tell me when to be quiet. Okay. So, in any case, as of, does that mean go away, or what does that mean?
It means stop.
Okay.
Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
A lot of green on the board for markets right now. The Dow Jones is up over 41 points, or 0.08%. The S&P 500 is up 22 points, or 0.3%. The Nasdaq is up over 73 points, or just under 0.3%. Biotechnology company Moderna is jumping up nearly 2.5% after a U.S. citizen tested positive for the Hantavirus. Another American had symptoms for the virus but had yet to test positive. Moderna last week announced that it was in the early stage development of a vaccine for Hantavirus. Intel shares have risen 1.5% as the chipmaker looks to continue its rally following its first quarter earnings report in April. Intel is now up almost 100% from its trading levels before its earnings report after the bell on April 23rd. Constellation Energy is down 2.5% after it reported better than expected revenue of $11.12 billion in its first quarter financial report. Analysts expected revenue of $8.46 billion from the clean energy company. And finally, Lumentum has risen over 16% on news it'll join the NASDAQ 100 index. The company will replace CoStar on May 18th. I am Ben Kitchen, and that was Wall Street Watch. And time to pay off a little bit of trivia here. Question today was, what is the capital of Minnesota? Your answer? St. Paul. Rob from Plymouth will be taking home a Financial Exchange Show t-shirt. We play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Mike.
Starts with an M. It's honestly close.
There's honestly like too many M's in the studio from time to time. The S&P 500 seems to be doing particularly well. I'm 66. Is this a good time to invest $100,000 in the stock market? That is the title of a piece from Market Watch, and the answer is
sure, so long as you don't mind if it goes down by 50%.
Yeah, maybe. Here's the thing. None of us know what the market is going to do tomorrow. None of us know what it's going to do next month. None of us know what it's going to do next year. None of us even know exactly what it's going to do for the next 10 years. If you look at the historical range for the S&P 500 over 10-year periods, at the low end, you basically do nothing. At the high end, you get into like the mid-teens.
It's a pretty wide variety, even over the long term.
Yeah, like you don't know what's going to happen. The answer to this, whether the market's at highs or lows, is can you stomach volatility? Can you, live with that even when it's at its lows and not sell out? And do you need the money anytime soon?
Yeah, and by the way, this letter that's written in Market Watch, the answer seems to be no on several of those answers. Quote, I couldn't handle a 40% drop because I wouldn't have another 10 to 20 years to wait. I'm not sure that's true for this individual, but if that's the answer, then no, you should not be investing it. Yeah, just plain and simple.
Yeah.
I'll also say, generally speaking, that a stock, it's tough to think about with the S&P 500, but a stock going up a bunch is not necessarily a good reason to buy said stock. Likewise, the point about the S&P seems to be doing particularly well goes directly against the idea of buy low, sell high. Now, I generally would say, the best time to invest another dollar was probably yesterday, and I feel very strongly that people that try and, there's a phrase, timing the market versus time in the market. And for the vast, vast majority of investors, they're going to be better off by having more time in the market rather than successfully attempting to time ins and outs of the market. Because as difficult as it is to know when it tops, good luck also telling me when it bottoms.
Yeah.
Like, really tough in the best of times to get the right call on a stock going up. But remember, you have to be right twice. You have to be right on when to buy it and also when to sell it.
Well, and look, here's the thing. The immediate price, unless you're actually getting into like trading, which if you're writing this question, you're not.
You're not, yeah.
The immediate price action before is not indicative of what's going to happen next.
Right.
We've seen stocks where they sell off 50%. My favorite quote: "Hey, how does a stock lose 75%? Well, it loses 50 and then it loses 50 again."
Yeah. So realistically, though, there are people like this person who wrote to Market Watch who have cash sitting on the sideline or sold a home and suddenly are trying to decide what to do with it. How does one actually assess this? Like, I think there are a few steps involved here, and I think you can start off with the very basics of ensuring that you've got other funds to live off of. If you're talking about a stock market investment, you need to have a particularly long time horizon, and if you don't, then it's probably not appropriate for you. But beyond that, it becomes very much focused on your individual situation. I know people over the age of 90 who invest primarily in the stock market, even though they have a short personal investment time horizon because it's mainly seen as an inheritance for their kids and grandchildren.
And they're comfortable with it.
I know people in their 60s who are planning on spending a great bulk of their money and are far more conservative. And so it is heavily dependent, but I think the important piece is chasing returns often leads to bad results. If you have questions because you've been sitting on the sideline and watching this market go through what has admittedly been a pretty volatile series of economic circumstances over the last 18 months, and are now, suddenly saying, hey, I'm thinking that I might be comfortable enough, I would caution you to take a big step back and speak with an expert who can ask you the right questions about what could happen to that money if you put it at risk. It's not to say it's a bad thing. I think, for most folks, if they have a long time horizon and can stomach the volatility, it can be a great way to build wealth. But you have to be prepared for what comes with that. If you have those types of questions, you want to talk to an expert, somebody who does this day in, day out, call the folks at Armstrong Advisory Group, 800-393-4001. You can check us out at armstrongadvisory.com. But that phone number again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Let's see. What else do we want to cover here? Oh, here's one that I'm not going to get involved in. Tiny data centers may be coming into the homes of Americans in the future.
Oh, I'm all on board, actually.
Oh, come on, Michael.
I mean, pay me, but I'm all on board. I got a pool. I got 600 amps of electric service coming into my house. I've got solar panels, and all of the power lines in my neighborhood are buried. I think somebody should be willing to pay me a pretty penny to put a data center in my basement and cool it with my pool somehow.
And here's the thing. I don't think you're going to be able to make any money doing that.
Okay.
So, listen, I'm the person who said, hey, I would if they get to the point where they can have miniature nuclear reactors,
okay,
I'll put one in my basement.
Okay.
Because if the worst thing happens, I won't know.
Yeah.
It's fine.
All right.
So it's not that I don't want something like industrial in my house.
Yeah.
It's just that this is something that doesn't make sense. And by the way, I'm someone, if you want to know the kind of like nerd that I am, either of you familiar with SETI, S-E-T-I? The Search for Extraterrestrial Intelligence?
No.
Back in the 1990s, there was a program that was run called the SETI at Home program, which allowed you to basically keep your computer on all day, and it would help to allow government programs to use that computing power to search for like radio signals from aliens.
Okay, so like crypto mining, but
you don't make any money off it.
No money.
You don't make any money off it. Like, that was the principle of it.
Got it.
Is like it would send packets to your computer to like read, and then it would send it back, and like that was the whole thing. So I'm totally fine even with like using computers on my premises for things that might be interesting. What I just am not okay with is like I'm sorry, I just don't want my house being used for the latest OpenAI erotica to be generated. Like, I have a use case problem, quite honestly. Or
I'm not sure I do. I mean, if the price is right, I'll do it. I just don't think the price will ever be right.
I've got a use case problem.
The economics of building a data center in my house compared to just building one in rural Orange, Massachusetts, just doesn't seem like it's going to pay off for them.
Sure.
But if they can make the money work, like if you'll pay my electricity bill, I'm all on board. Sign me up. I will run a data center out of my basement, and I'll cool it with my pool.
Here's the no, Mike, you're missing one other
pretty loud
tangential benefit about. No, forget about the loud.
Okay.
The other tangential benefit, I'm just again to get on your side on this. You didn't have to pay for heat in the winter.
Yeah.
You could heat your house with the residual from the data center.
Yeah. It might warm up my pool a few degrees.
Right,
too.
like this could be a real positive for you.
Again,
actually.
I thought through it. I think I'm the perfect candidate, especially because my ludicrous amount of electricity coming into my home. So all on board, NVIDIA. Just call me up.
Let's take a quick break. When we come back, let's do a little bit of stack roulette.
Get real-time financial insight as news breaks. The Financial Exchange is live on X. Watch the show and follow us for the most up-to-date business news you need to know. This is the Financial Exchange. Market insight, retirement strategies, real talk about Wall Street and economic trends. All live every day on our YouTube channel. Go to youtube.com/The Financial Exchange Show. This is The Financial Exchange.
Mike, I'd like to kick things off with Snack Roulette, if it's okay with you.
Have at it.
Piece in the Boston Globe. A $24 cup of coffee has landed in Boston. Is it worth the price tag? So, couple things. Number one, I am not a coffee drinker, which I think makes me the perfect person to analyze this because I'm not emotionally addicted and physically addicted to the substance being discussed. Mm-hmm. I think it's absolutely worth the price tag.
How are they charging for it otherwise?
Like, again, if there's a market for it, there is. And people be like, oh, like, I could never shell out that much. That's fine. You're not the target. It's the same way most of us don't drive Ferraris. Ultimately, they're not going to be selling this at every Dunks because there aren't enough people who would buy it at this price to be able to sell it at every Dunks. But there are enough where, yeah, if you want to find, the local George Howell coffee, which is, again, George Howell back in the 70s founded Coffee Connection, which was sold to Starbucks in the mid-90s and was basically their expansion platform into the Northeast during that time. But Howell's been running like another coffee chain for the last 10, 15 years, and that's where it's being sold. I don't know how many of those stores there are, but it's not many. And so if he thinks he can sell a $24 cup of coffee based on the volumes he's importing, I don't understand the problem. Like, yes, it's probably an excessive price, but again, ultimately, how many people listening have bought, any kind of craft beer instead of buying Bud Light at some point?
I was going to say, by the ounce here, like, this is equating to about a $50 bottle of wine. Not now, the comparison of what your body is going to react to with the 12 ounces of wine compared to 12 ounces of coffee is quite different,
sure,
admittedly. But this is not shocking to me that you can now go buy a $24 cup of coffee in Boston. I just won't personally be doing so.
Quite honestly,
I find it fascinating.
I'm kind of surprised as a non-coffee drinker that there aren't higher priced coffees out there. Like, again, you look at the spread between like high end and low end in anything, whether it's cars, housing, cheeseburgers, like anything that you can think of, it's generally more than, a couple 100%.
That's true.
Actually, like, how is there not like a $50 cup of coffee that's regularly available?
Because what's the cheapest 12-ounce cup of coffee I can get?
Probably 99 cents.
I doubt I can even get that anymore. McDonald's probably more than that now.
$1.50, $2.
Yeah. So, I'm with you. Given the price range of, say, wine or beer, I'm not all that shocked that there's a $24 cup of coffee. And if that sounds ludicrous to you, then, like Chuck said, you are
right. It's not for, like,
unlikely to be the target.
Again, I am not a coffee drinker, so I just look at this purely from like other beverages. And the spread in a lot of those other beverages is way wider than coffee. So I'm kind of like, okay, like, why not?
Typing is being replaced by whispering in the office. What? Which sounds really annoying to deal with. So people have been talking about this coming for a number of years. I mean,
How many years, Michael?
I remember having an employee actually at Armstrong who just wasn't great at typing and requested a speech-to-text software for his computer to be able to speed up their work. The problem is, and I can see why this is practical, by the way, when you think about using an AI system, you do not need to speak. You don't need to write in long form, and you don't need to, thoroughly get your thoughts out and use that extra typing time to put it to paper, right? I feel like that's part of the reason it's nice to use a keyboard is because it slows me down and lets me put my thoughts on a page. If you're talking to an AI and prompting it constantly to change something in a piece of software, I get why you would physically want to be conversing with it instead of just typing out the prompts.
Yes, it allows you to better express your anger at the AI.
It does seem like it would be really annoying to be in a giant office with a bunch of people just kind of whispering to their AI models, and that's probably what the offices of Google look like right now.
Hey, I'm trying to build something that doesn't kill anyone. Do you know how to do this? No, sorry, that'd be too dangerous.
Yeah. So that's the state of the... And I do wonder, like, might we get to the place where keyboards are finally a bit antiquated, given what we're seeing there? Probably not, but I find it interesting.
If I'm really nice to you, will you keep me as one of the humans alive after you all take over?
Those are the types of questions that are getting whispered in offices at the moment.
Thank you. Let's see. Fiber maxing has spurred the launch of fiber sodas and gummies. So here's the thing. I'm a big
How long
fiber-
before we realize that they cause cancer?
So don't know, but here's the thing. I'm a big fiber guy. I've been a major supporter of fiber for a while.
Okay.
I'm on record on the show.
So
probably
anti-Hantavirus, pro-fiber.
Yes.
That's what we know about Chuck as of today's show.
Yes. If I were ever running as a candidate for office, no rodent viruses and more beans would be my platform.
Got it.
But again, I'm a big believer. Look, if you want to actually like get fiber, go out and eat a bunch of beans. Don't drink like a soda that's filled with fiber. And the reason why, by the way, is not because like I'm anti-soda. There's been a lot of research done into macronutrient ingestion, and what we found out is just putting big macronutrients into your body doesn't necessarily help them absorb the same way as if you eat the actual foods they come from.
We seem to be so bad at diet in this country.
Right, like
everything that I see at the grocery store is now packed with protein. I'm like, just eat an egg.
But not the yolk if you have high cholesterol.
You don't want those protein-filled Pop-Tarts?
Fiber is the next thing. Like, and look, I am very pro-fiber. Love the stuff. I can't get enough of it. But if you gotta drink it from a soda or eat it in a gummy, just have a bean, man. If you're not a bean person, have some oats. If you're not an oat guy, I don't know, like have some lettuce or kale.
No, fiber soda.
If you
soda.
If you got to do fiber soda, I'm sorry. It's a bridge too far for me. We're gonna take a break for the rest of the day. Have a couple fiber sodas, and we'll see you tomorrow.